General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Okay, let's knock out the chart work. Today is Thursday, August the 6th. Framework phase, accumulation, really much of nothing day. Daily stance, sideline per the NFP week protocol. Monday, Tuesday, Wednesday, textbook trading. Thursday, take the day off. Friday, wait for NFP. Confidence level low. You can even when I have reason, price delivery signature seen, you can tell from New York KM session today that today was a good day to be sideline, and it was going to be an accumulation day just based on time. Week number 1, NFP week, ADP came out with so employment numbers. Anchor point could still be Wednesday depending on how NFP plays out. We did move away from the anchor, so expansion is playing out. Terminus hit today. No, I still think Wednesday high hold is terminus for the week. When price sweep if the 20-day look back. So here we go. This was the 20-day look back. We'll be pair orders. We're below this closing price, so that's bearish, but we respect the EQ and consequent encroachment of the fair value gap. So minimum objective of 50 hit and respect of the daily fair value gap upper quadrant. And this is kind of giving rejection block vibes, like we could trade into this week and bounce. H1, H1, kind of small range. Gives the day like Friday. Then if we can sweep the low, go high, sweep the high, go low. That's the type of day it is. Kind of trap order flow day. Prices between two FEGs. Now we rebalance the FEG, and it could be holding as resistance level. So we did rebalance this one because we gave it sell side, gave it buy side. Now it's a BPR from this candle, and we kind of rejected that level and we've been waking it. So we'll see if NFP gives us a bounce up to sell off, because this really wants to go bearish. Maybe just to fill the new week opening gap, which we really didn't get touched at all. M15. We did get the 930 from that's regular trading hours touching the week opening gap. This opening range gap is still naked. Not much of an expansion day. One good takeaway is the first 15 minutes have set the tone for the anchor of regular trading hour delivery. So 9:30, 9:30, 9:45, 9:30. And you kind of just wait that 15 minutes. Be like, all right, we're going up. SPX on the daily. No sell off or weakness from the broader market view, just a small range day. Perfect for NFP to use both sides before making a real move. Here go to H1. A little bit cleaner over here. We didn't make it to the fair value gap I wanted to see at EQ, but we respect the one above it. We didn't even breach CE, so this is like super bullish. We don't even want to give you discount prices vibe, but NFP could still give us that discount. SPX in 15. It is a nothing day. We go to stock chart spy on the daily. We did bounce off the new day opening gap, but still pretty much a nothing day. Nvidia is interesting though, because I do like buys from here this week, so and it's inside this volume imbalance. Could kind of act like a breaker. We broke a lot of highs right here too. 50%, I don't know. I wouldn't look for sales. I ain't that bold. But down here, I would consider buys. This new week opening gap, we may never see this again. Or at least until we hit this. But I like this for a swing target. So I like 219 or 214.39 weeks on for guys. Note the rejection from the VI and the new day opening gap fill. You can see news dips tomorrow, but ultimately I can see it taking out those buy stops from the last anchor. So that's up here. Alright, for gold, H4. Kind of chill today, but we did have this big expansion yesterday. So today it needed to chill, take its breather. If NFP comes down into this week zone, that lines up with this parent bar high, I'm interested. This is ideal pricing too. It depends on what it does to the dollar, because we could go all the way down here. It could just be crazy. I'm not underestimating gold. Thinking about a deal, we need a slow day after that big expansion day. Thursday, the day before NFP, is the best time to do it. I still like the week zone. No trade day, Thursday before NFP. NFP week protocol and weekly protocol in general will help me time when to strike during the week. Did the framework play out yet? What did I learn? Cycle lives matter. Weekly cycles matter, monthly cycles matter. What will I watch for tomorrow? NFP. All right, that's all the work. Y'all have a good day. Peace.